Welcome back, master students, to Strategies Week 9-1 for Moment by Moment. Guys, this is going to be the official shift. This is going to be the one. This is going to be the lecture here to change it all up for everyone. The make or break, as they say, or you know what? We can actually use it more as a potential. Let's use it as a bridge, right? The bridge to separate the children from the adults. Well, welcome back, everybody. Very excited to be here with you today. I have made a decision here. I have made an executive decision to start teaching you guys a system that I have not taught before, right? So this would be, I know that I have a few of my original master students in here, so very, very cool for that. This is to teach you how price action moves, right? So how I personally put together a thesis. I will say that it has a few steps to it. It's a little complex, and it does have its fair bit of challenges, right? So I will say, please try to bear with me, and you will have two videos to observe here, because this is absolutely something that you can use for the rest of your trading careers, team. Okay, so I'm incredibly excited to be displaying this to you here today. Okay, team. So we're gonna use if I get any oppositions, we can use ticker symbol Google, since it does have earnings coming up, or if we can do something entirely different, right? Maybe we can do maybe we can do MSTR. Because MSTR has just been ripping towards that upside. So I don't know if that's actually the best idea, because we are in this like price discovery, right? Let me see how it's looking, dude. It's just we kind of figured that we would use this break, right, of the 30 of the 30 level, the 230, as the reason for this thing to just, you know, manhandle its way towards the upside. And that's kind of what's been happening here, little by little, right? So I do like what's going on, team. I absolutely like it. Let me see what the heck is going on over here. Why am I out of focus a little bit? There we go. Hi, buddy. Okay. All right, guys, let me just go ahead. Hold on, buddy. Hold on just a moment. Hold on just a moment, team. We have the toddler here asking for something that I asked him to do 4 minutes ago, but now he needs to. Hold on just a sec, team. We'll get this thing rolling. My apologies. Yeah, just a sec. So this is actually appeared to not have been recording that initial time, so we can go ahead and just restart this. The little man is actually in the restroom right now, so we're going to keep an ear out here for when he is finished with his little due diligence, right? So welcome back, master students, to week number 9-1 for Moment by Moment. And I will say that this is going to be the moment where I'm going to teach you guys how to move price action, or how to observe price action from, I'm just going to say it, okay? This lecture is about giving us price action from the Euro open time into the later part of the day where market is closed, right? So traditional hours in equities, we're going to use the 1 a.m. session from my Pacific time, right? It's going to be your 4 a.m. session from your time frame, right? And we're going to make sure to get you to give us to give us price all the way into the market close of the following day. So in other words, tell me what price action is going to do at Euro Open. So from Euro Open to the early pre-market, which would be around 4 a.m. of Pacific time, 7 a.m. Eastern time, followed by the continuation into the traditional markets opening, right? So from those three areas, and then from the opening of the markets into lunchtime NYSE, and then lunchtime NYSE to its pinnacle, and then its potential close. So this is what I expect from you, and know for certain here, team, that I am definitely going to be looking out for your charts on this, right? And you can decide to either do your analysis here for the next day's price action, or do your analysis for maybe tomorrow into the following day, right? Whichever way you want to observe it, it's up to you. It's okay. All right. So, but just understand that this does take a lot of steps. I will have to have you maybe consider writing a lot of this down, right, team? But I think that there is enough context here to get this, to get students to really recognize how to get this done, right? So why don't we just go ahead and take a look at ticker symbol. In this case, I think it'll be a little safer to do ticker symbol DJT, since it does have continuation upwards, right? We still have some price action up there, which we can use as potential resistances, and price action below that we just broke out of that we can use as support levels, right? Good stuff. Let me just go ahead. Why is that video playing? Stop playing video. Okay. All right. So let's go ahead and get this moving. Okay, you guys. I guess the first step that you can observe, and wait, one more step before I give you, or one more piece of note before I give you this next information. The steps that I'm giving you, there's no necessary order to them. It's more because I remember it in that fashion, right? I tend to perform my analysis through, I guess in the structure that I'm going to present it to you first, right? So it doesn't mean that you have to put it together in that structure. You can mix and match and do it as you will, or as you please, right? Because everyone's strategy will differ a little bit here and there, right? So it's really not a problem for you to observe differently, right? So it's all good, team. So let's go ahead and get that first step out of the way now, right? So officially, the first step that I would say is to observe your closures, right? So first, we know that the daily closure closed, right? We had a full day of trading, so that gives us one closure. We have the daily time frame closing, right? And now we have to observe what other time frames closed in the immediate short term. So it looks like here that the buy daily time frame closed as well. So on price, you can see it right on the right hand side, right? I'm going to point at it, right, just in case we can't see it. So right there, price is showing no time or no clock under the price, right? So where you can see here on the 3-day that it still says 1 day and 19 hours, the buy daily does not show that. 4-day time frame also shows no clock, which means that it's closed as well, right? So 5-day time frame still shows 1 day, 19 hours. Weekly time frame, 3 days, 19 hours. Bi-weekly still going there, and so on and so forth, right? So yes, please take into account those closures, right? So the daily time frame, the reason why we're doing this is so that we can potentially plot out your 50% retrace of this bar, right? So for example here, daily time frame retrace on DJT would land right about at this point here, right? So in this case, we're going to just go ahead and note this as your daily 50% retrace, right? Very good stuff. So we'll now know that that's what it is. Okay, so now let's go ahead and go over to your by daily time frame, apologies, and note that down. It doesn't matter how low or how high the valuations are, just make sure that you can keep it in line, right? Another thing that we're going to do, sorry about that, team, is just we're going to get rid of anything else that was previously drawn on this ticker. Nothing else matters here. It's just what we're doing presently, right, team? Okay, so now it looks like we have the buy daily close. So let's go ahead and plot out here a 50% of the buy daily time. Okay, so this here we'll put buy daily retrace and have that titled as well. Okay, maybe we can consider even dropping the yeah, maybe we can consider dropping the size of the font just a little bit, right? It tends to get a little too in the way, but it's all good. All right, team. So this is your daily 50. This is your buy daily 50%. Let's do the 50% as well, just to keep things organized here, right? Buy daily 50% retrace. Now let's go into your 4-day, right? So that's what we kind of jotted down here as we were observing the larger time frame closes. So the 50% would land right about this point right here. So as you start gathering all of these closes, you're going to start noticing the rhyming behind or you know, within all of these, right? So this is going to be your 4-day 50% retrace, and this is good here. Okay, now I don't know if you guys are aware, but I know most of you probably are. But we are we are about to close some really macro time frames here, right? And those macro times would be identified as your monthly, bi-monthly, and 5-month candles, and those are going to be critically important for us to note, right? If we don't have that noted down, then we probably are going to be eating crap, right? So let's go ahead and go over to your monthly time and identify the 50% of your monthly as well. It doesn't matter that it's all the way down there. The point of this is so that we can just gauge the overall probability of DJT's price, right? So let's go ahead and put that down here and just name this the 1 month 50% retrace. Okay. Let's go to the bi-monthly, since we have, I mean, look at this, guys, 2 days and 19 hours, right? So bi-monthly, 2 days and 19 hours as well. So it looks like the bi-monthly is slightly lower here, presenting a range. So that would be 2680, and we'll name this one, of course, bi-monthly 50% retrace. Okay, good stuff. Let's note it down just like this. And of course, the last one here would be your 5-month bar, right? So 5-month bar appears to have a pretty, yeah, I gotta say, team, it is, it's not quite confluent. It's actually, well, I mean, I guess it is, right? What's the top of the price action here? That would be a high of $50.62. Right there. Okay. So, and the range on this is confluent enough to the bi-monthly. So let's just go ahead and leave it as bi-monthly and 5-month, 5-month 50% retrace, right? Okay, good. Now we have these areas kind of noted down here just so that we can observe those potentials, right? So team, now please know this, okay? I am jotting down here. I am writing down. Yeah, you would always start from the daily, brother. I would honestly, right? Because the daily time frame is the one that closed, and it would be of interest to you to start off with that time, moving forward. So now, team, what I will say is this: you can clearly see that I'm plotting out these. Yeah, Ian. No, it's no problem at all, my brother. You're okay. You're okay. Yeah, all you're doing here is just plotting out the 50% retraces of every bar that closed. So start off with a daily, and then look later in the other times. See if there's a close on the 2-day, on the 3-day, 4-day, 5-day, weekly, whatever that is, and whatever's coming in, right? So yeah, the 1 month, the bi-monthly and the 5 month are confluent. Looks like 1 month and 5 month confluent instead of the bi-monthly. 1 month would be, let's double check that, right? So I'm gonna move the box just like this. Okay, so this is your monthly here, right up here at around 2680, and your 5 month is all the way down here, and it's at around 2373, and your bi-monthly is also right about that 2373 as well. Yeah, so I'm seeing here the bi-monthly and the 5 month as confluent. Would you use anything under the daily time frame? If you need to, yes, absolutely, and I will show you that we will. So here is just we're starting off the first step to this in the larger time frames, right? We want to get the complete scope over where things are going to go, right? Do the candles need to be yes, it has to be closed. So the daily, we have to look at the daily because it closed, right? The daily closes every day, so we close it, right? Then we look at what else closed. The 2 day, the 3 day, 4 day, 5 day, weekly, bi-weekly, whatever closed next is what we plot out. We still have a 3 day time frame, 2 days to close. We're not going to plot that out because it's not closed, right? We need to officially make sure that the 50% is cataloged here based on fixed numbers and printed numbers, not on numbers that can still have movement and stuff. Okay. So what about upper wick on the 5 month, or am I tripping? So on the 5 month time frame, I did take into consideration that wick, right? So let me just go ahead and do this here and show you here that on the 5 month, we have this top area here. There we go. Sorry about that. So it is roughly around 2449, and you have 2373. So that's why I'm saying that they're confluent to each other. It's 2479 to 2373 on an asset that's moving those $3. It's a daily time frame, a daily ATR all the way down here, which is $20 out. I'm not gonna really sweat that. You know what I mean? Because this can only move around. Well, I mean, it can move more. Of course, anything can happen in the markets, but this is generally moving $3.30, something that's $20 away. No problem at all. We have to understand why, though, brother. So something that's $20 away, probably, maybe let's not sweat it. I will say this, and I'm sorry. I was gonna say that I would say this eventually, like what I just said here. I did say it later on for the week 9 strategy students. So all good. So let's go ahead and now continue on with the information here. What I was going to share with you a little bit earlier is that you see me plotting out the 50% prior bar retraces of all of these closures, right? I am simply putting together the 50% closure. Just right now, 50% only. But just know that whenever you are plotting, right? So for example, here, the daily retrace is saying that the 50% is exactly 44.37. We wouldn't be following the exact number of the 50% of the bar's retrace. We follow price action. Whatever has the most impactful something, right? So for example, up here, there is a gap in this area here on the daily time frame. So I would probably favor the 50% right up here at this gap, right? I think that the gap would eventually come down and fill because the price action is on it's on a slight retrace, right? So that gives us the opportunity here to kind of combat the top end of that gap, but I still have to kind of keep it, right? So I think that the pullback zone on this would actually be these. You have to use your discretion here, team. You have to use like whatever and anything at your advantage. So here, with my own discretion, I think that the opening valuation of this red candle and the closing valuation of this candle being confluent to each other and showing confluence to several other candles, then I'm probably going to use that one as the top of the range, right? So that would give us here this zone. So now in a very discretionary fashion, we're looking at your daily retrace as this zone, right? So that there's here's your daily time frame close at 47.36, and I'm suggesting that price action would end up in here because of these areas that have high validity, right? We have to be careful with those things, team, okay? So just to put things out once again, right? Just to put things out once again. Remember, team, the first step to go over on this is actually to find the closures of every single time frame that closed on that day, whatever day it is that you're observing, right? Whatever day it is that you're charting it out, let's look for the closures, right? So let's do right. We have the daily close here. We also have the bi-daily close and the 4-day close. Okay, so with those closes, right, we would take into consideration this, Cheche. We would actually just mark off the 50%. So using one of these boxes, all we do is just measure it like this, right? Just like this. And then we plot out the 50% of the prior bar of the existing bar. So 50% on the daily, we go to the 2-day and 4-day and plot out their 50% as well. And just to keep things a little bit organized, we'll kind of title them just like this. So in fact, I should probably consider keeping this there. So the daily 50% retrace, I would have to have two different targets, right? So daily 50% retrace on this. So just so we know that these are relevant to each other. What I was saying is that after you plot out the 50% of the daily bar, you wouldn't actually respect the 50% of the bar. You respect price action near the 50% of the bar, right? So here the price action was around 45.30, but we're noticing that there's like this, back in the daily time frame, we're noticing that there's like this big ass gap over here. So we would naturally favor some and then another gap over here, right? So we would naturally favor those areas as a higher likelihood of finding some support before it gets the upside. So in other words, what I ask the students to do is find the reason why price action would not reach the 50% of the day. So whatever that reason is, it has a higher probability of a bounce zone, right? It makes it incredible for as an edge for us, right? So favor the gap and supports nearby. That's right, mommy. And yeah, we adjust the levels just like we did here. So now we have an adjusted daily 50%, right? That's all good. You know what? In fact, I think that I should probably just title it here. Daily 50% retrace zone, right? And then we can get rid of all the noise here just so that we can keep things, as organized as we can, as small as we can. All right, so now, just like we did on the daily time frame, we also look at so we have the bi-daily retrace here. This would be its 50%. So naturally, we look back. But here's another trick to this, okay, team? We can use the weekly time frame, use a macro time to understand what could be in the way there, right? So, for example, this bi-daily retrace, look at price right now. It's sitting at 47.36. The bi-daily retrace has a valuation of $40.94. So $40.94 is sitting right about here, okay? But obviously, you can see that this massive, this is the opening of the weekly bar with a huge gap that's confluent to the lower part of this wick, that's confluent to the lower part of this wick, right? And the top of this wick. All of that is of high validity. So that naturally tells us that we would probably not reach the bi-daily retrace at 50% because of that gap, right? So now we look at where's the low of the wick, right? So the low of this range on the weekly time frame is very confluent to these tops of these candles, right? So whatever is close, and there's another gap over here, so we're going to have to favor that gap instead. So that gap would be the bottom of the range, and you can see that it's a very tiny area. But if I can be clear about this, it's going to give you a 50% of that zone as well. So if we zoom in just like this, right? Let's get the box moved over to the right there, and we start to use the gaps top to the gaps low. You're going to get an approximate 50% on price with that blue line that we just drew, right? So just like this would be your 50% zone of that area. This would be the top area that we're expecting, and this is the bottom area that we're expecting. So I'm not saying that we're going there. I'm just saying that we're plotting out the zones that we can use in order for us to kind of respect of a critical demand or a critical supply. You know what I mean? So these would be the very, very higher likelihood areas that price will bounce very aggressively from, right? So let's say that this is now, let's title this one now the buy daily 50% retrace. Okay, you guys. So, team, my apologies. Hold on just a sec. The little guy is officially done with his bathroom break. So let me just go ahead and get him taken care of. Just a moment, team. Okay, team. He is good. He is good to go. Okay. So let's go ahead and continue on with the lecture. So yeah, now we have now just to display to you, right, how to correct your zones. We're using price action, right? We're using whatever would be of higher relevance near the 50% zone. So not necessarily the 50% zone of the exact bar. It's always price action. Price action is king. Okay, team. We always follow price no matter what. Okay, guys. So also let me know if I'm still connected here, because I'm getting some issues on my yeah, I'm getting some issues up here on YouTube. So just let me know if I'm still consistent over here and we are okay. Good. Thanks, guys. Thank you so much, team. It's always a damn problem with YouTube. Okay, so now that we've identified the 50% retrace zones, I guess I can, the 4-day 50%. I'm just gonna put it over here, right? Because it's near this area. I would have to favor it, right? So the top of this candle being the closing of this weekly bar is completely confluent to the low of both of these green bars, and also confluent to the opening of this green and the closing of this red bar here, and the top of this wick. All of those candles in sequence, right? All of those candles are completely aligned with each other. And not to mention the opening valuation of this candle here, the closing valuation of this one, and many other stupid things, and even in smaller time frames and whatever else, right? Cool. So naturally, we just adjust that to that area. So I'm not going to continue adjusting these targets here. I'm just going to adjust the 50% of your 4-day, right? So what I'm seeing here is that now, since you have this 4-day 50% retrace at an area that's very, very near the bi-daily 50%, we can adjust the target, the bottom target of this daily bi-daily 50%, to the 4-day, thus making the 50% zone of this, the 50% of the zone, the low of the current weekly bar, right? So let's move it down, right? And watch this 50% zone be the low of the actual current week that we're on now. The relevance comes in just like that, right? So right about there. Now the 50% zone turns in to the low of the current week that we just closed, what, yesterday or 2 days ago. So that makes it of higher relevance, right? So now, team, we have to retitle this, right? So we would retitle this thing as bi-daily and let's see, yeah, bi-daily and 4-day 50% retrace zone, right? So now we have that cataloged for us there. So now you can see that all those lines that we just drew have just turned into 2 boxes, right? So these 2 boxes will consist of 3 targets each, naturally speaking, right? So so I think that we would just put our receipts on there, right? We can use this price label tool here to kind of put it down like this, right? So we'll just leave every target in order here, and then we're going to start observing the shorter time frames, right? So we can determine how to put together. Remember, guys, what I'm expecting you to do here, what I'm expecting from the students to do, is for you to give me price action from Euro Open, 1 a.m. Pacific, 4 a.m. Eastern time. You're going to tell me what it's going to do from 1 a.m. to 4 a.m. at our early pre-market, which is 7 a.m. Eastern, and from that early pre-market into traditional pre-market hours, which is 6:30, which is 6 a.m. Sorry, correcting it again. I made a bunch of mistakes on the other lecture, right? So 6 a.m. Traditional equities, 9 a.m. Eastern time, right? So, and then from that, I want to know what price action is going to do intraday into lunchtime into its peak price or whatever that may be, and where is it potentially going to close. That is what I'm expecting here from all of those students. What's up, mommy? It's speak it to me, right? BTC running. Let's go. Let's do it. Man, that's going to be interesting times. 320 on. No. It's okay. It's okay. Please go ahead and ask me anything you need. Anyone, really. The Russian purchase? Is up almost, what? Is it really? Holy freaking balls. That's right. We ended up hitting, guys, I mean, I'm not going to lie. I had a target for this week of 256.80. 82. This was it right here. We spoke today of, I mean, where did we open today, man? We opened today like at 240. I was telling you that we would hit 253 to 256.82, and we hit 259.80, and now where? Where is it? Is it at 260? Is it at 270 something? Because here's your next target, 345.50. Get the fuck out of here. I mean, I'm not joking when I told you that you would be part of the biggest short squeeze ever that has existed on Earth. It would be through MSTR. And it has been happening. Team, remember, look at I want to remind you over where our potential original supports were located, right? They were located down here at $112, right? Ripping to the upside, gaining entry at around 180, and now it's sitting at around 270. What? 270. It's 269. Jesus Lord. Oh, man. Yeah, so just heads up on this, guys, and I'm still not kidding. I'm seeing targets. I do have a target of around 315, 316 on this, but the formation is actually 345.50. So please, I will be going over this ticker first, right? As soon as we get into the market prep. So yeah, let me just go ahead and kind of leave this here and continue on the analysis. Thank you, mommy. Thank you, baby, for telling me this, because this motherfucker right here going rip. Okay, so it was DJT, right? Okay. Yeah, let me put the chart together on that thing, and then fucking and then we'll set the play for it, dude, for sure. So yeah, guys, let's continue on the thread right here and see what's up. So now we have these zones drawn, right? Those are your 50%. Let's go to the immediate short term. We want to see how time is cascading, right? So let's use the 15-minute. We're going to use volatility versus momentum, right? So in this case, we're going to use your stochastic momentum indicator versus your volatility in linear, your VHM, right? So let's go ahead and observe what that's kind of looking like. See if there's any pullback somewhere, right? So actually, let's just start it from the immediate. So 5-minute time frame does show potential downside here right away, right? We're noticing that there is a curvature. I'm gonna have you focus on this, right? But yeah, there's still time, because I think that by March, the MSTR would be around $1,000 to $1,600. Like, I'm not even joking. It's like, I really mean that. I'm not kidding, dude. I'm really not kidding. Like, Tesla is also giving me signals of potential $1,000, you know, and oh my goodness, it probably will. Okay, team. So now the next step into determining all that price. Okay, team, follow me here, because this is going to be something that's very, very, very useful for your trading career. Now, if we're going to use the immediate short-term price, right? If we're going to use the immediate short-term price, anything between 5 minutes to 12 hours in those candles, we are determining what's going to happen into Euro Open, right? So whatever valuation we got post-market today is going to be 49.50, right? There's always a potential institutional or block trade that can pump price towards the upside, or pump price or you know, decline price towards that lower end. It's always of a higher probability for it to do that, right? It's no problem. It's okay. Things happen all the time, right? So if we can determine mathematically what that drop will be, then we would use the curvature of stochastic momentum from the top end of any time frame that displays it, right? Just like this. So 5-minute time frame on DJT showing weakness, right? 10-minute time frame. Let's go ahead and see if this thing is contracting, or what is it doing. Okay, it closed a red bar on the 10-minute time, and it hasn't seen it just yet. So this is likely to feel the pressure from the 5-minute time frame. What is the 15-minute doing, right? 15-minute time frame. Also, it's contracting, right? There are no buyers at this area here. And this is completely consolidating, it's sideways, right? So that also tells us that the 15-minute time frame will also bleed from the 5 into the 10. We're using a domino effect here. Okay, now let's look at the 30-minute time frame. 30-minute time frame is closing a little bit of a green bar, but instead of kind of using this as a potential continuation to the upside, let's use this as the potential range that the 5 to 15 minutes may use up and down, right? So I'm thinking here that price action goes to 49.40 and 49.62 if that is the case. So let's continue to the hourly and see if we have downside pivots. Okay, never mind. The hourly still has some curvature here that can give us some pressure towards that downside, right? It did close a very nice green bar. However, it's inside the prior bar. So an inside green bar is still a little bit weak, right? Still not giving us enough strength for continuation. And in fact, volatility here is completely contracting, right? So that means that we're decelerating. As volatility contracts towards that downside, we decelerate, right? We are not gassing it anymore. So if let's just say that stochastic momentum were pivoted straight to the upside, and you can see here that volatility is expanding, that means that we're throttling, we're accelerating towards the upside using the bias of stochastic momentum and the acceleration of volatility and linear, right? So that's how we're able to tell the direction of the price in that time frame, right? So we can see here that there is a potential downside on this. Of course, the hourly bar already closed. Naturally speaking, we would be assuming that the hourly time frame may have a 50% prior bar pull, right? So that would bring us down to the area roughly of around 49.30. You guys already heard me say 49.40 from the 5-minute using the 30-minute range, right? So it's already rhyming pretty nicely with the hourly. Let's go ahead and continue on with the analysis. Let's see what else has a downside curve, because if we still have more downside, that, we're going to have to use it mathematically. So here, the bi-hourly time frame did print. I got to point this out. Yes, it is pointed towards the upside, but it's at freaking 95% overbought, and it shows here that we have retraced the majority of times historically from that 94.75% top end, right? So we have to be careful with that. People are trading stochastic momentum's top end as well, right? So let's go ahead and see what else is giving us the potential downside signals, psychological reasons, right? So this is your bi-hourly time frame. What did we print here, team? Okay, so that obviously is looking like a potential hanging man candle, right? It is also, let's see what the high of this candle is. Is it confluent to the that's right, my brother, that's right. So the top end of this candle here would be 49.95, and the top end of this candle, yeah, so we have a perfect tweezer top hanging man bearish buy formation, right? So we have now two reasons for price action to consider a downside, right? So this was very impressive, right? If the bulls were going to take it at any point, they would have taken it here and break above the 49.95. Can somebody tell me if it's already broken above the 49.95 or not? Because I honestly would probably not have taken it myself. It did retrace to the 50% of the bi-hourly bar, and it did continue towards that upside. But if they had the chance, I would have taken the $50 target. It's just a $50 zone is a really heavy psychological target, right? So it's at 49.69 right now, right? So it still hasn't combated that top side. We have to see what the hell it's going to do. So and $50.08 after hours, right? So it does look like it kind of penetrated just a little bit. That was your peekaboo before continuing towards that downside, right? Things like that happen all the time, team. Remember, right, when you're getting the first breakout from a critical resistance as a breakout trader, you're not entering so hard in the initial time, right? You would enter a very light risk and then potentially observe a bull trap, right? It could be a false break. It doesn't mean that it's going to continue. Oftentimes, institutions trade that initial break to benefit from that immediate move and take the scalp, right? Take the big ass gain from that rip to the upside and then dump out on everyone buying that way up, thinking that it confirmed already. So hence why some people trade as confirmation traders. Doesn't always happen, right? Hold on, team. All right. So let me go ahead and continue right into this lecture here, team. So now that you're catching these notes, now that you're observing how how the price action can do its thing, right? This is really what will make or break you as a trader, right? Understand that there is a true edge with the direction that I'm guiding you here, guys. I would not, if I were leading, right? I'm probably not going to do this, to be honest with you, but if I were leading a trade desk, right, if I were the one that's the head of equities or whatever, it doesn't matter. If I were the one to do that, I would not have you. I would listen. I would need for you to master what I'm talking right now, what I'm talking about right now, in order for us to have a higher probability outcome into the price action for the next days, right? I want you guys to know this. Okay, so let's go ahead and move beyond the bi-hourly time frame and see what we have. So 3-hour time frame, same situation here. In fact, you can see on volatility that volatility is actually curving now, right? It is critically expanding, but it is curving. So that's showing us that there is a bit of weakness towards the bull's strength, right? So now another thing for us to observe is this, right? Please go ahead and give me another reason as to why you believe price action would be running bearish. Go ahead and focus. Let me know in the chat what you see that is another reason for this thing to consider a downside. Happy Dorito, that is absolutely correct, right? Hydra, very correct. Yes, Buzzman, that is 100% correct. Damn, MSTR just ripping it, right? So good, you guys. I'm very, very excited that you guys are absolutely sharp enough to understand that what we're observing here is a complete bearish divergence, volume versus price action going towards the upside, volume completely decreasing on that ascent, marking off your volume bearish divergence, right? So that's giving us signs of potential immediate short-term upside, potentially around that 49.96 to 50.08 that we hit before a continuation towards the downside, where we're going to see whatever it is that we're going to observe here as a potential pullback. Okay, so now let's, I guess we would have to say that the 3-hour time frame does have some of that drawdown as well, right? So let's move on to the 4-hour and see what's up. Okay, 4-hour time frame, it is kind of curving at the top. It's consolidating here. It's not pivoted straight to the upside. It's looking like it's also a potential 3 rising methods or 3 white soldiers, right? There is a few things, right? That's right, Ian. You're noticing that the candles are getting smaller as they rise. It is of critical importance for us to observe every single potential every single potential retracement signal, right? And no matter what, yes, right. That's what we just mentioned before this, right? That was your volume bearish divergence. This is your bearish divergence, volume versus price, right? So, and that paired with 3 white soldiers or 3 rising methods on a 4-hour time frame. This paired with smaller candles growing towards that upside, the 3 white horses, right? Says Quinny baby, honey. All right. And all of that paired with a massive overbought zone, right? 3 Kamalas. That is a bearish signal as fuck, right? Good. I shouldn't have said that, right? So don't make this thing public. Oh my goodness, man. So let's go ahead and now take a look at the 6-hour time frame and see if we have, okay, 6-hour time frame, same thing, guys. 3 white soldiers, right? 3 rising methods, bunch of horses going towards the downside here, right? Also the curvature on stochastic momentum, and of course the decrease of volume in the immediate short term, right? So now more signals for potential downside. Are we at a resistance, right? I guess we're going to have to look at it in the macro scope first. So enough time frame now for 6 hours of retrace. We're going to move this along a little bit faster now, right? So take a look at this, right? 8-hour time frame on stochastic momentum is giving us this little bit of curvature. Remember, team, that's what we're overall looking for, right? We're looking for that curvature. I'm not going to lie to you for 1 second. Observing the 8-hour time and giving us this one iteration of lesser volume, but with the candle looking the way it did, this typically means continuation, okay? So these are strong full body candles, right? So I tend to look at candles, a lot here. So please respect that that process, as it is absolutely necessary for us to observe. Now, what I will tell you is that if we are getting strong candles like this on a major time frame, that only means that the downside may be limited, right? So now we're observing that there is strength in a larger time frame. So we could be experiencing a temporary retrace before a continuation to the upside. And seeing that this is DJT, Trump Media Technology, what is the catalyst behind its continuation towards that upside? Let me know in the chat and we'll go ahead and evaluate together, right? Go ahead and post the catalyst here for DJT and the reason for it to continue its ascent. So that's absolutely correct, right? So we absolutely have the elections coming up here fairly soon. Buzzman, that's correct. So yeah, we have so you're thinking a $47 potential pull. Yeah, it could be it, right? Yes, Trump's potential victory over the presidential elections, right? So Madison Square Garden, oh my goodness, man. So yeah, now let's go over the volatility versus momentum signals on the 12-hour time frame, right? So 12-hour time frame, tiny little bar right up there, right? It's completely expanding, right? So this makes it a little bit dangerous here if this starts turning around, right? If this starts turning around with the curvature that you already see, if this turns around and we're still expanding, that means that this thing is about to drift over that turn with expansion, full throttle, and then throttle towards the downside with all that expansion, right? So got to be careful over how this is being traded at a $50 psychological zone. More of the reason, right, for our bearish thesis on this, temporarily. Only a temporary bearish thesis. Okay, daily time frame. What is it doing? Well, it's curving and it's expanding, right? So that could also tell us that there could be a little bit of downside on that daily. By daily time frame, pivoted straight to the upside. It looks like it's not giving any retrace on that. I will say that there's also a probability, since this curvature here in the 3-day is there. 4-day time frame has one tiny kink on the SMA 14 teal line, right? So that may be giving us a little bit of weakness there. I will say that this thing is almost a full ass Marabazoo candle, but it did close. Yes. Go ahead. Hold on, guys. Can you go to the bathroom? Okay. Honey, I need to finish working, okay? Hold on, baby. Take a seat here. Okay, team. Let's go ahead and get this done. So now the reason for the 4-day to pull back, you're thinking to yourself, wait. This thing looks in ARCa. You may be wrong here, bro. Look at every single candle that's printed, and also take a look at the freaking volume here. We're completely on an ascent with upside price. Why the hell would we retrace on this? Let me know in the chat why you believe the 4-day candle will retrace. Be sharp. Be smart. Think. Put it in. Why would this retrace? I gave you every reason for this thing to have bullish continuation, but why would it retrace? Almost. Okay, so if we retrace, what would be the retracement reason, though? Open it. Yeah, it's open, baby. Oh, there we go. Right, got it, right? We have another time closure, a macro closure. The closures, guys, yes, that is it. The 4-day time frame closed today. So that means that 60 to 70% of the time we'll get a 30 to 50% prior bar pullback, right? So that would be the reason. It would be just a technical reason. This is telling us that there's really not too much of other technical reasons out there, right? I guess if we did look at these candles here, I mean, this is going to be a really tough retrace, right? Because we do have some critical support zone. We have a major support zone right in this area here, right? So if we're going to test it back, that would be 37.86. So in other words, Ian may also be right about that, right? So if we are to do that, let's keep that in mind. Let's put it in the back burner. So the 4-day time frame closing like this would tell us that we would potentially pull back to somewhere around that 50% zone, or 30, or even past it. Anything can happen just based on statistics, right? Now, let's go ahead and take a look at the 5-day time frame. So this would show just a little bit of weakness there. 5-day time frame, that's where it is, team. Take a look at this. The 5-day time frame is not giving us any weakness whatsoever. We have the EMA 3 on stochastic momentum and the SMA 14 completely in bull strength right now, and the SMA 14 in the gravitational zone of the bull strength percentile, right? So this is completely rocket shipping up there, right? Now, if this thing is going to rocket up there just like that, what's to back it? Well, take a look at this. We are throttling towards that upside. Even still, moving average is also pivoted towards that upside too, right? So that would give us a higher probability continuation on this 5-day bar. It hasn't even closed yet. It's still moving up. So that means that, yes, the immediate short term is still just a temporary pullback. Now, what is the pullback? Yes, we identified the 50%. We identified all those areas, but mathematically speaking, we use the average true range of the last bar that shows the weakness, right? So in this case, we're noticing that the 4-day is the last bar that has any type of curvature, and it's closing at this 4-day valuation. And yes, I'm going to favor you guys by saying that it is at a double top. Peekaboo right up here, right? Potential continuation towards the downside. Reload, validate supports, continue on towards that upside, right? There's always a process to something, man. You can't just get up out of your bed and then expect to just be at work, right? There's a routine that you do, right? You get up, you go to the bathroom, you probably shower, right? You brush your teeth, you do your whole deal. You get dressed, you get in the car, you drive in traffic, you get to the office, and you're at work, right? There's always a process to life, right? So there is a process to price breaking out of zones, to price closing at major timeframes. There's always going to be some crazy ass reason for price action to do what it's going to do, right? So now that we know that, how do we figure the pullback? Since we said that we have the last candle here as a 4-day, look at the current ATR. $6.85 would be the area for pullback. So that means that we would be pulling back to around 46.90, 46.80s, right? So 46.80s on this. What the hell? I'm sorry, that's $6. Yeah, so 41.80s, right? So 41.50, 60 around there. What the heck is being displayed at that $41 target? Well, let's go ahead and enable here the drawings that we already did and take a look at what price action magically displays for us without even noticing any type of fucking math. Look at the 50% that we adjusted a little bit earlier, marking off $41.41 to being pretty much the 4-day ATR low. Naturally speaking, mathematics will follow discretion. Mathematics will follow psychology. It's up to us to determine how fucking clever we're going to be in the markets, or else we're going to get our asses handed to. We are not the traders that we're not the guessing traders. We are the disciplined traders. We are gentlemen and gentle ladies of the NYSE, and that's what we do professionally. So let's make sure to show our edge here and to show how tough we can actually be. Now, it's not over. It's not over just yet. Yes, we identified, mathematically speaking, that the 4-day time frame would be the last one to show any bearish signal at all. And it just so happens to be the pullback and the one that we already kind of looked at, right? Nice. Cool. Great. What's to stop price from getting here now? Invalidate the bear thesis. That's my next step for everyone. Invalidate your bear thesis. Find the reason for this price not to reach that area there. Look left, zoom out. Let's get down to granular levels here and find out what could be, or let's use the macro time where we are now. In fact, why don't we just go to the weekly? Screw it, right? Price action is sitting at 47.36 right now. So let's find out what the heck could be happening here, right? Okay, so yeah, your previous resistances would probably be around here, that 50% of your daily retrace, right? So your daily 50% just so happens to be the top an opening valuation of this weekly candle back in July 15th, 2024. Holy shit, more rhyming? How the hell did that just happen? Wait a second. It's the opening valuation of the week of May 28th, 2024, the closing valuation of the week of May 20th, 2024, and pretty damn confluent to the opening valuation of the week of May 6th, 2024. All those reasons could be reason for this to experience what we already said could be a temporary pullback. We have a catalyst to lead this thing towards an upside, and we're getting closer and closer to that top, right? November, elections. So the higher probability here would be that it pulls back temporarily. So I want you guys to identify that confluence of the 50% of the prior daily zone, that 50% of the prior day, guys. We didn't look at the weekly, right? We looked at like that. We just to remind you, and you can look back at this video later on, where you're gonna remember, holy crap, we only saw the daily. We didn't actually go to the weekly and map this out. We mapped it. We mapped the bi-daily and the 4-daily on the weekly, not the daily. It's to show you that that your discretion by learning how to read price is critically and utterly important for you to determine the higher probability retraces and continuation zones. So that to me would be a critical enough reason for us to pull back, right? But yes, it's still, we can't ignore the fact that we still have 4 days of potential pullback. I'm not about to do this. I'm not about to do this with you guys all the way, but another way that we can observe this team would be options flow. So if we use options flow and we use the highest open interest, highest potential volume on the put side for either this week or the following week's expiry or the next week, right? Either the same week, bi-weekly or 3-week expiries, using the open interest highest valuation of the puts in that area would probably be confluent to a high enough zone up here too, right? So why don't we go into the hourly time frame and or maybe, you know what, let's use a 4-hour bar. Actually, that's too much. Yeah, the bi-hourly, because that's giving us the downside signal, right? Let's take an inverse fib, right? Let's take a fib from the range low of the bi-hourly, right, to the range high of the bi-hourly, and watch us not step into a 618 in our midpoint. So there we are, right? So here's your 618 at 45.06 and your 2-spot 618 at 46.37. That sounds like this, right? 45 and 46. So geometrically, it's also confluent. Now, well, 80% of the gaps get filled, but do 80% of the gaps in DJT get filled? And here, hold on, let me expand your mind even more. Do 80% of the gaps get filled on DJT on elections year? Do we have enough information for that? You know, do we have, or how about this? Let me take it deeper. Do 80% of the gaps close on DJT's specific time frame that you're looking for in elections year in a transitional Fed or transitory Fed? There is so much gambling in that zone that you're talking about that we'd have to find another way to gain higher probability outcomes. We wouldn't just use this. So we're noticing here that we wouldn't have that much information, right? We don't have that much info for us to gain a higher probability move. So let's find information elsewhere, right? So again, right, it's just saying that probably it would be a guess. So without using statistics, it's just going to be a better guess, the best guess, an educated guess, right? Sometimes I like playing educated guesses. Sure, I do, but I generally like to have numbers back it. I like to have data tell me that this would do it, right? So yeah, it would probably be bullish than complete upside on this, right? So I guess let's observe here. Here's a, oh man. Let's go to the daily. Let's get rid of the drawings and put together, let's just look at the averages. Let's go to the weekly. That's too far. Let's go to the 4 hour where we were. Okay, the SMA 5 is sitting at around 44.75. 6 hour time frame SMA 5 sitting at 44. 8 hour time frame SMA 5 sitting at 41.76. That's the low that we were expecting on a 4-day prior bar pull. Now going to the hourly bar, man, it's like a symphony of moving averages here. It's not giving up. Right? So yeah, team, a little difficult to do. Oh, how about this? Let's get rid of the moving averages and start looking at reversions, right? So potential 2 standard deviation retracements. So on a daily, what is our 2 standard deviation retracement? So this would be, let's see. There you go. So this would be a retracement to $44.22 on the daily time frame using a reversion, using a standard deviation retracement. So it would look like this, right? So here. And I mean, look at your monthly retrace. The mean of your Bollinger Bands is literally at the monthly, perfectly at the monthly retrace. 50% prior month. Okay, so let's go to the 4-day because we just closed that. Man, that one's getting really crazy too. It's saying $42.33. It's also confluent to the 4-day retrace. Holy crap, man. How about VWAP? Take a look at VWAP being sitting here at 42.70. Confluent to the 1 standard deviation or 2 standard deviation retrace or top band of your Bollinger Bands. Confluent to the 4-day time frame, 50% prior retrace, which is also confluent to the bi-daily, right? So mathematically speaking, yes, we can support a drop back down to the areas of around 41 to $42. But this has a component that we're forgetting. This has a psychological component applied. It's the hardest thing to identify higher probability moves using or considering psychology. This now, because of the price explosion that it's gone through, it's now a psychologically impaired asset. So that means that anything can happen at these points. The overbought levels can continue overbuying, right? Because it's just an average. It doesn't mean that if we're at 100% RSI, it doesn't mean that it's going to pull back. It just means that it can continue overselling or overbuying forever. It's just an average. It's an average that we use as traders to identify we're probably going to pull back at this hot zone here, right? So we put together our thesis in that. So I guess now that we know that we have all this downside, mathematically speaking, right, let's support that. So let me get rid of the reversion variant. VWAP also located down there at that 42 level. Let me get rid of the very confluent Fibonacci ranges. And let's start now plotting the price action for Euro Open, right? So immediate short term on this was showing us that we have a potential drawdown on this. So that means that I think we're double topping at that $50.08 zone before continuing to the downside. So if we are considering immediate short term, that's 27 cents ATR downside 5-minute, right? 10-minute time frame has the downside signal too. That would be 49 cents of retrace. We have, and let's see what the inflection zone is here post-market. Okay, so the inflection zone, let me see. $1.05 is showing a pullback here on the hourly time frame. Double top and potential continuation to an inflection here. Okay, I see it. There it is. 48.55. We're sitting at 49.50. We're showing a $1.05 ATR on a 30-minute time frame. So yeah, I'm thinking I'm going to start plotting it out, okay? Probably going to have to use a tiny little arrow on this. Okay, so I think price action is going to do this at Euro Open, right? Potential opening into this area here, which could be around that $50.08 zone, even still, right? Resistance from there. Since we're noticing that the hourly time frame or the 30-minute time frame can retrace back down to the inflection, it's confluent here, right, to the 30-minute retrace. We use that zone to support. We come back to validate the post-market close, right? Right around this area here. That would have us retrace from that area and start a continuation into 4:30 a.m., 4 a.m., which would be 7 a.m., the early pre-market start. In which case, we could start a validation process. From that point there, I think we would bounce, resist here at around, this area here would be 4 a.m. 4 a.m. we bounce and start resisting from this area here to this area here. Right? So otherwise, this resistance that we identified. This would create a slight bit of consolidation before we can decide we can either decide price going up or price going down. If I were to guess what's going to happen here, head and shoulders potential formation, thus leading price action towards the downside, and let's catch the target for that downside. So it would be something like, let's go ahead and plot it out as close as we can, right? So I would say maybe like this here. Yeah, just about like that. Remember that this is discretionary. We're putting together the thesis here. Center of the of the head and shoulders is your implied target, right? Your price objective. Apply it to the center of your shoulder, right about there, and your target is coming out to $41, even still, which is the confluent area that we saw on a 4-day close, 50% prior bar, which is also confluent to the bi-daily 50% prior bar, and it's also confluent to a million other fucking things that we haven't even looked at just yet. Now, the direction here would be potentially that. So all of this distribution may happen. Guys, I'm not going to say that it is. I'm just showing you how things rhyme, right? So if this does happen, so this would be our area of inflection here too. There's a big ass gap. So we would naturally be supporting somewhere around there, right? Very, very cool stuff. Now, if we can observe here some type of continuation for price action, I would say that we would be at these lows come market, pre-market, right? Traditional equities pre-market. So that means that by pre-market, we could have a downside here, which introduces what when we open up intraday. That means that we would potentially be gapping down on the day, which means that the probabilities of reaching back to gap up and close that gap become a higher probability. The decision from that point would be to gap. It would be a gap and go, right? Or a gap fill retrace. Right? So that would be the decision to make at that point, guys. So if we can determine, I personally think that it's not going to be a gap and go. I'm sorry, I don't think it's going to be a gap fill retrace, right? I don't think it's going to be the gap fill retrace. I think it's going to be a gap, right? Potential support retracement to this lower end of this. Looks like it would be your power hour or lunch, or NYSE lunch low, right? You validate that as support. Then you would continue towards the upside. get the chop in here, right? And then you continue towards your upper bands. So that $50 zone validates the break of your 50% prior bar retrace, which then introduces the continuation to the upside, introduces a potential inverse head and shoulders, and also introduces an immediate short-term time frame Wyckoff redistribution 3-cycle phase, right? So this would be something along those lines with your terminal shakeout and or a spring. So what I'm doing here is I'm identifying several different types of strategies all in one to identify a higher probability outcome. Right? Great man saying, I feel safe saying you've done this a few times. Dude, of course, brother. But I got to tell you, team, that this is a process that you can use for your strategy, right? Use it for your ability to I don't know, guys, if the more you practice this, guys, the better you'll be at price, right? So this is my thesis, right? So if we are to make a continuation, I think that daily time frame would give us the potential upside. If we open the market, if typically we open at we're saying that we would potentially be opening on a gap down, right? So if we open the market here at around $42, we have $3 of upside, right? So $3.33 of upside. Let me see. So 42 or 43, we said, or 41 to 43 is right around that area. 3, 4, 5. Yeah. So if we did 43, we would resist right back into this zone again. We would get the FOMO wick into the 47 or the prior bar high, and then consolidate. But if there is enough reason and enough push on the S&P 500 or by its own FOMO, then this would probably continue into the $50 target. But I can already identify that I got to say that my top resistance on this for tomorrow would probably be around $50. So now the retrace of $50, right, would land us to close the range of this day at around this area here at the 50% prior bar. So we would create, I think we're going to create here some type of true green outside bar, bullish and like a bullish engulfing. It's going to be a green over a green bar, or it could create a little bit of a bearish engulfing, thus introducing the potential possibilities, right, or the potentials of testing your $33 to $36 zone into Monday or Tuesday of next week, maybe. But that's beyond me. I'm talking about potentials here. I'm talking about outside of psychological reasoning. What I'm talking about here has nothing to do with the price action that I'm introducing for tomorrow, right? So remember, the price action that I think would happen for tomorrow would be set just like the way I kind of did here. I think that the overall resistance would double top tomorrow, right at around this place, and I think that we would also close the market at around this area here. So in this case, I would put market close potential. This is what I want from you. I want you to be able to put together this thesis in whatever ticker that you choose. It doesn't have to be for tomorrow because we're already we're already so close to the next session here. But this is something that we are going to, guys, this is your turning point, okay? This is the point where we separate the children from the adults. I'm going to be tough on you. I'm going to be critically tough on you. But I will tell you this. I expect you to be wrong on the first try. You don't have to be right. In fact, if you're right, then I'm going to go ahead and focus on you and say, do it again. And I want to see you hit 3 of 3. Or let me see you hit 2 of 4 or 3 of 5. You know what I mean? But I'm a big bully, but this is kind of tough, right? It is kind of it's so much work to do, but that's, guys, what we just did here Right now the times are really specific, right? Like for example, today we closed the 1 day, 2 day, 4 day, and we also have coming in 3 days closing the monthly, bi-monthly, and 5-month, which includes a whole bunch of other work that we have to put together on the chart to identify retraces and supports and demands and supplies and whatever, right? So it's a lot that we have to consider here. But on a normal day, when you say, ARCa, can you look at ticker symbol yada yada? Can you look at ticker symbol TTT whatever? Can you look at ticker symbol whatever? I am doing all this that I just showed you in a matter of 5 minutes and delivering it to you on the ARCa's Plays of the Weeks in a nice little image. You know what I mean? So that's where I want you guys to be. That's where I expect you guys to be. With enough practice, you're going to be able to do this entire thing that we just talked about in a matter of 10 minutes or less. Because the reason why I went through all those time frames together with you, team, is because I have to show you how to do it. But I will tell you this. I'm looking at only the daily here. I remember how I only looked at the daily to display the 4-day 50%? I'm using only the daily to be able to tell me where the month 50 is, by month, 5 month, the 4-day, the 2-day, and the daily retrace levels are. I can already observe them just from the daily, so I don't have to go into all of those individual time frames because I stare at the chart so damn much that I can just simply count 1, 2, 3, and 4 candles. 50% of this is confluent to the gap, right? All you have to do is really that. We're sitting right now on October 25th. Do you guys remember when this trend started? We have to keep an eye on things like that. September 20-something is when this trend started. So let's focus on the bottom side here. And there you go. September 24th, October 28th on the top, which means that the 50% monthly would be somewhere around here. Or whatever. It just observed, guys. And then because we have a 50% here, we have a bunch of supports here. We have a gap over there. I can already see that gap's going to line up with that. And then my setup just tends to scramble, right? And then I won't focus on the specific order, which is why I don't have it written for you as a PDF. I have it displayed to you because every single individual asset has its own psychology applied to it. Think about it like a person, right? So a psychologist or a psychiatrist would evaluate one person at a time, sit them down. We, as traders of the financial markets, are mass psychologists as well. So we would take our patient, DJT, sit him or her down there. We would take our patient, Tesla, sit Tesla down there, right? And we're going to evaluate their characteristics and their behavior as a whole. The whole of the participation, right? The characteristics of each individual participant trading the asset creates the one personality, just like bacteria or just like mitochondria or just like just a multi-celled organism, right? It's consistent of millions and millions and millions and millions of cells, right? And that multi-celled organism creates the one person. Yeah, flocks of birds, absolutely, right? The formation theory, the formation comes from that, right? So if you're seeing birds flying in that V shape, you can already assume that they're migrating or they're flying north because of warmth. So the formation tells us what they're doing. The head and shoulders formations tells us what we're doing. Right? Or tuna, like we spoke of. Tuna in the sea. They get into the shoals, right? Into the schools. So they all go like freaking crazy and do this thing as a formation. We know that it's for protection. It's to fend off predators. So we know what the formation means. Everything in life correlates to the trade. Everything does. Which is why I ask you to take your craft, whatever you love to do so much in your life, right? Take that craft, hone it, right? Remember what you did to get really good at it, and then do that same shit on the trade. You're going to notice that it took the same effort, that it took the same love. Right? So just like that, team. So I want you to be able to display that to me and just pick your stocks apart. You have to have thesis behind it, okay? I don't care that you're wrong. In fact, I want you to be wrong so that we can dissect why. How about this? Jen told me, you know what? Freaking things surpassed my target. But it reached my bottom side target, and it didn't reach my middle one, but it reached my top. So then I have a reason to go and dissect why it didn't reach the Euro Open target, the middle target, and whatever else. We can go in and literally pick apart that problem and see why, and then adjust, because our systems are attenuating still, right? We'll have whatever. Don't think about your system as a digital system. It's not that. I'm talking about your rules base. Your systematic approach to trading will be set in your head as this criteria, right? So I look at the RSI for this, I look at the VWAP for that, I look at the 1 minute time frame for this, or the 5 minute time frame for that, or the hourly, or whatever it is in your system. Every single trade you do creates a little bit of slight attenuation. You're always attenuating because every trade is not the same trade, right? So this is why I'm telling you that I would rather you be wrong, right? So that we can adjust and we can fine tune the reasons why you may be missing it, right? It took a lot for me, guys, to become that. I mean, you guys can tell me for yourselves, like, what am I notorious for on my targets? Do you guys remember? Like, what am I notorious for on my targets? I'm always what? Exactly. And I don't have to say it. I don't have to say it out loud. You guys already know because you guys watch it. You guys see it happen. It's like, this dude really missed it by a penny again. And again and again and again and again. So then it's starting to be like, bro, are you actually even good? Like, can you not adjust to the penny? I try to, and then it overshoots the penny. It's, guys, fuck. You know what I mean? You want the damn penny? I'm trying to say that with enough practice, we can get it to that point to where you're now off by pennies, you know? Because I can't expect you guys to be absolutely perfect. It'd be amazing. You know, that'd be fucking outstanding. But we are based, guys, we're flesh and blood, right? We're not fucking machines. We don't manipulate price per se individually. Right? I'm only 99.99% right. Dorito saying that I am a machine, though. No, guys, I swear on everything, right? There's no crystal ball. There's no AI, right? There's no anything like that. It's just our sheer ability and will, right? And how much time you have behind the screen. It's your screen time. So just fucking focus on it. Just be about it all the time. And then you'll notice that practice after practice, guys, you made me better. Because I put myself out there to say, you know what, I think price is going to do this. And then price happened. And then people were like, whoa. You got lucky, fool. So then I did it again. And then they were like, okay. So then again and again and again and again. So then you start building up a following, and then people start to look at you like the fucking drummer on like the Americana or like a very crowded street is the dude drumming on buckets and stuff, fucking looking at you. Right? The crowd will start surrounding you. You know, so I started doing that. So then it means that I started to pay that forward. I had to fucking tell everybody what I thought their stock of choice was going to do. It got to a point where I didn't even know what I charted the last day. And I would have a ton of comments telling me, dude, you nailed it. Like, that's the practice. That's the rep, right? So you're not going to go into the gym and fucking just pull out 750 fucking pound dumbbells and start just going, all right, one and done. You did nothing, right? You want to make sure to keep your shit balanced and work the reps, right? It's about the repetition. So if you can repeat and consistently repeat, right? then you would probably be able to gain some consistency and some knowledge, and then be able to gain that like ability. It becomes that to where somebody, now you become that guy like at the bar, and you become that guy around your friends, and people just look at you different. And it's only because you practice that something. That's all it really is. Anyone can do this. All you need is the will, right? So practice that. So practice that, okay, team? I love you guys so much. And I know that I went way over our time, right? But I think that this is one of the most critical lectures that I've ever put together, right? I think probably the most critical one. But I got to say that there's still a lot more. And this is just the beginning of the shift for you to become the next type of trader. I didn't know this. I didn't know this before, guys, until I realized that I can just see how we were behaving. It just started lining up. All the lights came on. I was like, holy shit, there it is. And there that is, and there that is, and there that is. And then magically it was just there. Right? No, none of us are good enough, bro. None of us are good enough. It's a probabilities game. So I want you to up your probabilities. So this is the start of that. This is where I start to sharpen your trader. Your inner trader gets sharpened here. This is the official start of that. But then when we're done now, like for example, the image that I put together for you on a 30-minute time frame like this, right? Now that you know the direction of price from its genesis all the way to the end, now that you know that, you have the strategy down, right? So you were clean about it. So now you're getting higher probabilities. More and more targets are starting to meet over time, right? So then what would happen is that you built the strategy. So you remember to learn from the original master's course with me, right? We learned what candles were. We learned what formations were, what candle clusters can do, what moving averages do, what indicators are, right? We got to know the entire toolbox. Then I started having you pull out those tools in strategies. So we're going to pull them out and we're going to set them. We're going to set them apart, because in order for us to get something done, we're going to try to see, like, for example, we're going to pull apart this transmission from this car. So we're going to use these sets of tools here, these sockets, right? We're going to use this thing right here, this thing right here, and this thing right here. Let's make sure that we have that ready right there so that when we get to the job, we're able to just do it on the fucking fly and with no questions asked. Everything is prepped. All the parts needed, replacement, everything, it's done, ready to go, packaged, right? But then what happens when you get to the job? You have the tools and you know the strategy all written down. You have it written down now, theoretically. Do you know how to install it? When you get to the fucking job, do you know how to install it? Well, that's what executions is after this. Ian, I'm speaking to you here because you're telling me, I'm wondering if I'm good enough. No, we're not there yet, because I'm not finished with you yet. We have a long way to go. And when we finish executions, then you're going to identify how to behave in front of that client. So if you're at a job with all your tools and you know the strategy and now you know how to execute it and install it, when you're at the job, do you know how to behave in front of them? Are you going to put on your laptop? Are you going to put on your laptop like a bunch of fucking porn and shit? No. Are you going to take your socks off and work and take your pants off and work on your boxers because that's what you do at home? Fuck no. Psychology after executions. We need to know what we're going to use, how we're going to use it. We're going to also need to know how to apply it, right? And then what psychology we need during that installation. All of this, guys, all of this is set in this order for a specific reason. And fuck yes, I'm building an army. I want fucking elite traders or nothing. Yes. Hell yeah, I did, baby. Take a look. So I'm gonna, well, you know, I'm gonna have to just go ahead and put the receipts on this, right? But yeah, I potentially did. I think it would be something like this here, like this, like this. Yeah. So I put it together, right, just like I did with you, so that I can make sure that the team knows that this is these are the expectations. So that's it, you guys. The lecture is now officially over. Just go ahead and ask me any questions you may have. I love it, Jay. Right? Any questions you may have, just go ahead and plot them out here. But if we don't have too much, let's just go ahead and get ourselves into the market prep. Let's find out what the hell is going to happen tomorrow, because I need to know what MSTR is going to do. Right? Could we use the previously closed candle to use to find retracements on candles that haven't closed? Could we use the previously closed candle to use to find retracements on candles that haven't? Yes. That's why I mean that when you're observing price act. Oh my goodness gracious, dude! I was just talking about a 71,000 today. I think, wasn't I at 73 or something? But Ripe, that's what I mean in the beginner's crash course, that price action is that's the magic indicator, right? Everybody thinks it's the one that gives you the buy and sell signals right here because it's the fucking 99% whatever, and then I had Lambo in the video and girls, right? No, it's not that. It's actually price action. It's just raw price action. A bunch of fucking candles everywhere. All of these fuckers everywhere. That's your higher probability. These. So that means that you have the price action looking, this is your current price, your future price, and historical price. Why future? Because we were already there, so we can assume that we can be there in the future. Forward-looking indicators would include, remember this is from the beginner's course, forward-looking indicators would include your personal trend lines, a Fibonacci retracement, Fibonacci time cycles, Fibonacci fans, right, whatever it is, Elliott wave theory, Fibonacci, Wyckoff, those are all potential forward looks, right? And also price action, the candles. Price is king. What happens when it gaps up? It depends on how hard the gap up is. So think about this. You guys are forgetting week number 2 and strategies already. I'm noticing you guys are going to have to continue watching these videos more and more. We already spoke about this, okay? What happens on a gap up? What we do is that we take the information, right? We take the value of that gap up, right, between the close and the opening valuation of the next bar, and we take the information from that time frame. So say if it was a daily gap, we take the daily price action, open, high, low, close, right? And we import the data into our systems, take an AI. We put it into the AI and we ask it, right? What happens typically after a gap up that's around this range or at that percentage range? Then it'll tell you it has happened 16 times prior, and there is a probability of retracement of whatever percent with whatever probabilities. That's what I meant. So then pre-market gap ups, we use the 12-hour time frame or the 4. So you have no idea how many people in here, Seb, you have no idea how many people in here regretting getting rid of their MSCR. Dude, we're going to go and find out what MSCR is going to do in the market prep. Same situation, Hydra. It would be, first of all, we have to be careful in pre-market and post-market gap ups because those are institutional block trades, right? So block trades on by institutions, that just means that they are transferring because of market volatility, right? They would transfer, for example, 200,000 shares of Tesla, right? They're going to transfer them from this area to this area. In between that lit exchange, right, to the dark exchanges, there could be extra volatility presented. So there could be one candle here and then bam, another candle up here at Euro Open. Ian, always, bro. And I encourage you to also look at both of these videos too. I give critical information on both of them, always. I really mean this to be like, dude, you got two lectures of the same kind, but slightly different, right? And with added nuances here and there. You did, I know. I love you, brother. So, guys, remember what I'm saying here is that if you haven't signed up to your executions course, make sure that you do so. We're already at week number 9 of potentially 12 to 14 on this, right? So we are definitely beyond the halfway point on this. I have to start prepping for that executions course, and we're going to get you guys in there and do our little dance, right? I love you guys so much. Please go ahead and continue asking the questions. But if we're done here, team, let's make sure to pull ourselves into the market prep and find out what MSTR is going to do, because it's still... Torito, you sent me a DM? Okay, brother, I got you. The second part of my question, ARCa... Oh, right. Sorry, buddy. You said when using the monthly for a retracement, if it's closing in a couple of days, would you prefer we use the... Damn, that's information that see, that's what I mean. This information I gave in the first video. In the first week, week 9, this is week 9-1. So on week 9, which was on Saturday, I spoke about the ratio, right? So 30-minute candle, 1 hour, 2 hour, 3 hour candle would give, that's right, honey. Thank you. So literally like that, right? So I think your 1 month would probably be a day before close, maybe. No, wait, hold on. Yeah, a day. So then your daily candle would probably be an hour, hence the power hour. Right? So now the 30-minute, 1 hour, bi-hourly 3 hours could give you 7 to 9 minutes before it's closed. It starts retracing. The 4 hour could be a little bit of a gooch right in between, another region. Now, if you're talking about 6 hour and 8 hour candles, those are going to be roughly around 15 to 20 minutes before they close to start pulling back. So I'm thinking that the monthly, bi-monthly, 3 month, 4 month, and 5 month, those would be 1, 2, 3, 3.25, 4.25, 5.5 days to close, roughly. So then again, we would ask our AI, take price action into consideration here, and tell me in a month-to-month basis when the asset tends to decompress from its high or low. So then you're going to start getting, so it looks like on average around so-and-so amount of time to its close, it starts to retrace. Or you can manually backtest it, right? So these are the questions that we would, because remember that we're talking about on average here, right? But is it the average of DJT? Is it the average of Tesla? Because remember, every single individual asset has its own characteristic, its own persona. It's its own entity in the trade. So we then would have to evaluate that persona or that character, right? We have to evaluate it and see what its traits are, where it repeats, or the things that, the quirks, right? The knacks, the ticks. And that would be the best way for me to observe it. But typically speaking, I would say 1, 2, 3.25, 4.25, 4.3, potential 5.5 days, right? To the 5 month candle. Go ahead, brother. Please go ahead. Yeah, getting this market prep would be MSDR, stop printing, please. Oh my goodness. Time to get a VPN, guys. Let's open up a broker in Singapore and trade it. Seb, you can't answer it right now? I'm just asking out of curiosity. Oh, shares, yeah, but not options, right? It was because it's after hours. Okay. You had asked us to check our charting after the day happened. How would you like us to do it? Is there something specific you want us to look for when analyzing? Yeah. How close were your targets, moment by moment? And then I was telling you guys last, on Saturday that, or today, I think. I forgot when I said it, but I think it was today where I was saying that maybe we should dedicate one of the lecture days to go over our assignments together, right? So we would go over the charts and kind of pick them apart one by one, and you'll notice critical information that somebody may have that you don't, and vice versa. So it would be kind of like it would be sort of a peer review. Everyone gets in and steps in and says their feelings, right, or their thoughts on chat, and then I would also be chiming in to kind of mediate that. So it would just be as simple as that for now, but we'll break it down together in class. So Hydra's saying that would be good. So Chad saying MSTR 5-month close soon. Yes. Oh my goodness. Yeah, not yet, right? Statistically speaking, yeah, it's not always a thing, man. And that's why I was saying that. Like for example, DJT. Like, will it pull back on a 4-day time frame during elections? During a transitory Fed, during or in the time frame that you're asking for, in the month and the second or third week of the month coming up, statistically speaking, right? So all of those things can, lead into so many variables. Now, Ripen just saying that sounds really good for the idea. Alpha saying that's a great idea. Okay, brothers and sisters, I'm going to go ahead and make sure that we can do that. What say you guys? Should we do the strategies review, peer review this coming Saturday and Monday? Because this is a real critical one, guys. Idea to just immediately attack it, which probably is going to add now yet another week into strategies. Man, it's going to end up like at 15 to 16 now, huh? If you know, you know. I know, man. So Hydra saying, more importantly, whenever you have time. So no, I think that we can use the time that we traditionally use for the lecture, and we could peer review our charts, right? And I think this way we can really see that, oh damn, that was something I didn't think about. This is a different approach because I gave you the criteria. It doesn't mean that you're going to use it in the order that I said it. It can be used in your discretion. Okay, all right. So yeah, we'll do both of them, right? I'll make sure to do both of them. And then also, if I can't get through all of them, right? So I'm going to just make sure to ask the people that can't make it on Monday, right? I'm going to ask for them to be first on Saturday. For those that cannot make it on Monday, let's evaluate those charts first. Right? So that way we can just separate it all into one shot. Because I noticed that most of the crew makes it on Saturdays. But yeah, team. So why don't we go ahead and close up? Let's go ahead and get ourselves into the trading floor in the ARCa Bulls Discord, and get ourselves ready for a market prep. I really want to know what the hell this MSTR ticker is doing. I want to know what Tesla is going to do, and all of that good stuff. So I enjoy this a lot, team. I enjoy teaching you, and I enjoy that you listen. I mean well. And I mean the best for all of us. 2 hours flew by here, man, for sure. You're very welcome, Hydra. I love you guys so dearly. So please make sure to reach out to me. Make sure to, most importantly, get yourself signed up already to your executions. Let's get that done immediately, team. And also, make sure to just have an assignment ready by you don't have to have it ready for tomorrow, right? You can do Thursday to Friday. You can do tomorrow to Thursday, whatever it is, right? Or tomorrow to Wednesday, Wednesday to Thursday, Wednesday to Friday, whatever it is, just make sure it's before the weekend. So then we could, evaluate. Yeah. Yeah, I'm going to keep that for that. You're very welcome, Torito. Love you, brother. And Ripe, always, bro. Always, man. You can always count on me, buddy. We got this, man. All right, team. So, Sherlock, love you, buddy. Please be safe. And I'm not sure if I'm going to be able to catch you on the other side, but I will see you there if I see you there. And if any questions, you all know where to reach me, team. Love you all so dearly. And okay, good stuff, bro. And I'll see you in the market prep right now, team. Peace out, guys. I'm going to go ahead and stop the stream here for YouTube. And